This is Charleston's retirement coach, Brandon Bowen.
The market has posted more healthy gains this year, despite the headlines, Brandon. Things like war, inflation, tariffs, AI disruption. However, trader Tom Sovsnoff was telling Yahoo Finance that investors, we may be getting a little bit too comfortable. This is what he said.
I think we're being complacent, but not because of things like geopolitical events or macro events anywhere. The market's too smart now. There's too much information out there. There's too much money. The market doesn't care. But I do think we are being complacent. When you look at the totality of everything out there, I think we are being complacent as investors. The fact that nobody's been hurt in so long that you just get to the point where like, hey, I can take a punch. You know, if you're a fighter and you don't think the other side can hurt you, you just say, give me your best shot. Okay, and you're still standing. That's where we are.
So you, in your career, you've seen plenty of ups and downs. You've seen the bull and bear markets, Brandon. What worries you when working with near retirees and you see them start or actually believing that the market is just going to keep shrugging off bad news and continue on this run that we've been on?
Yeah. Anytime you think, oh, it's fine. The market's going to come back. It'll come back.
It's fine is never a good reaction.
Oh my gosh. Yes. Because you're just going off of lived shared life experiences, right? You've watched the market and it has done that. True. I would have to agree. Yes. The market has. You look back in 2000, 2001, 2002. So those 3 years, the market was down. Then it came back, right? It was a 3-year decline. Then it took 5 years to recover. Then we had 2008 and it went down about 50% in a year and a half, but then recovered. It took a few years for it to come back up. So yes, we do have these recoveries after crashes and things like that. But you had time on your side and you didn't need income at that time. So that's the big difference. And that's what I want everyone listening here. If you are, within 5 years of retirement or already retired, then listen up, right? Because what the risk that I'm talking about here and want to explain is called sequence of return risk. Okay. That is the order in which we make or lose money, can affect your portfolio when you're pulling income. Okay. That's the biggest thing is when we're starting to need income from this portfolio, if it's on some big roller coaster and you need this income when it's way down, well, to satisfy the income that you need, you've got to sell more things at a lower value, right? And that can really do some damage to a portfolio. And so, so right now, I mean, what concerns me about the market is there's just so much riding on big tech, right? That's what the AI, the tech sector, that's what's really driven this thing. And the big money's been pouring into those companies, right? Leaving a lot of the other ones behind, a lot of other sectors and parts of the market. So, it's not as healthy as it might feel or look if you hear all-time highs,
right?
With the S&P 500, the NASDAQ, right? The Dow, everything's hitting all-time new highs, but that doesn't mean that everything's healthy. Okay. So we've got to realize that, understand that. And we do have a lot of things testing the market with the inflation and the tensions, like you mentioned there, Heather. So let me give you a story here. These are some clients that came down from Boston. Okay. They lived up there and retired in kind of late 2021, moved down here to Charleston to, their son was here with a new family. So they wanted to be down here close to the water. Great, right? They had saved $1.5 million up there. And so then they moved down here and they move in with their son there to then start house shopping and, see what they can find. They didn't want to rush the decision, right? So they moved down here, 1.5 million saved, but they kept it invested like back when they were working. And it turns out they were in very risky tech sector, actually the ARKK. If anyone knows what I'm talking about, the ARK with Kathy Wood, it's a really cool tech ETF out there, but it's very volatile, right?
Yeah.
She likes to invest in disruptive technology. So there were 1.5 million in that and a few other miscellaneous
Whenever
positions.
I hear invest in disruptive ... I'm like, Is that what we want to be doing with our precious nest egg? But, to each their own. But still, whenever I hear invest in disruptive, I'm like, I have questions.
Disruptive tech. I mean, healthcare, right? So it's cutting edge things.
Yeah.
But it needs to be over in a nice isolated, tiny little, allocation over there that if it drops 50%, it's not going to ruin the day. So anyway, so they moved down here and they were invested like that. And so that was in late 21. So 2022 happens. And what happened in 22? Well, that was when the Russia-Ukraine war broke out. And then Powell was raising interest rates very fast, like every single time he could, he did. And he was just raising interest rates. So if you remember that, what happened to the S&P 500, it went down about 25% from peak to valley in 2022. And so that's when they're here and they're trying to shop around and look for a house. And this portfolio, this is before they came to me, by the way, but they're out there looking to try to find a house. And this portfolio is just losing. It's hemorrhaging money every week, just going down further and further and further. Well, they finally called a timeout and came into my office. Okay. And they brought me their statement and they said, Brandon, this was at $1.5 million. About 6 to 7 months ago, it now said $800,000 on there.
Wow. This is in 2022?
Yeah, 2022. So you listening, imagine that for a second, right? You had 1.5 or whatever number you might have in your portfolio. And then imagine a decline of almost half in just like 6 months. Okay, that's how fast that sector went down for them. And so they're sitting there looking at each other like, okay, what do we do? Do we like, oh, it'll come back, kind of thing, or how much further is it going to go, right? That was the dilemma that they had. And so, we had to quickly start doing some things and looking at what are some things we can do to try to limit losses right there, but still try to participate in the, recovery that came in 2023. So we put a plan together for them, but that was something that was a life lesson for them that I want you listening now to, those are the best lessons to learn are from someone else's mistake.
Right.
So learn this lesson here. It's the sequence of return. If you're nearing retirement within just a few years, then I would say, then right now, if your portfolio, if you're at all-time highs, now is the time for you to pick up your phone, call or text my office, and we start putting together your own customized retirement playbook. Okay. We start looking at, okay, where are some areas that we can take some winnings off the table, right? We can start saying, okay, thank you very much, tech sector. We're going to take a chunk here and we're going to start allocating it because we need income, right? We need income maybe in 24 months or in 12 months, right? So we want to start slowing our roll, if you will, start getting over to the right-hand lane because our exit is coming up, okay? So if you've got retirement on your doorstep in the next, I'd say 5 years, we need to be putting this plan in place right now, all right? We don't want to keep our money at risk in the stock market like that, waiting on history to repeat itself, right? So let me give you my phone number. That's 843-890-2400. 843-890-2400. If you have saved $500,000 or more and you're within 5 years of retirement, I want you to call or text Tanya right now. She's standing by and she would love to talk to you or text you right back, get you on the calendar. We do have 5 spots available here this next week. 843-890-2400. And also if you've already retired, okay, and you've been, gosh, I would just say, praise the Lord that's, luckily that the market has not crashed. You went ahead and retired. And if you don't have this income plan, if you still have all of your money or 80 or 90% of your money exposed to this market, you need to kind of say, okay, I'm so happy, the worst didn't happen, but I need to start getting a little bit wiser about this money. Let's put some guardrails up. You've already retired. So how can we add a little bit more stability, peace of mind with your portfolio? 843-890-2400. I would love to begin this process with you and give you your very own customized retirement playbook today.
Thanks for listening to Charleston's Retirement Coach Podcast with Brandon Bowen. To learn more, visit bowenwealth.com and join Brandon for his radio show, Charleston's Retirement Coach, Saturdays at 11 a.m. on 94.3 WSC.
Financial professionals are not licensed in all 50 states. To find out if J. Brandon Bowen is licensed in your state, please call 843-203-2030. J. Brandon Bowen is an investment advisor representative of Bowen Wealth, LLC, a registered investment advisor. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. J. Brandon Bowen is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Bowen Wealth, LLC, insurance licensed in South Carolina. Market Guard is a registered investment advisor with the SEC and provides model portfolios only to Impact Partnership Wealth. Market Guard makes no implied warranties or representations and is not liable for any data presented.